If you're following our Global Economic Outlook series, hit subscribe to stay updated with new country releases. Cambodia's economy in 2024 to 2025 displays robust productivity anchored in sustained GDP growth, extremely low unemployment, stable interest rates, moderate inflation, and manageable public debt. This combination highlights the country's ability to maintain a dynamic growth trajectory across multiple sectors. The GDP annual growth rate rose to approximately 6.4% by end 2024, building on a pace near 5.5% in 2023 and exceeding 5% earlier in the decade. This expansion reflects strong performance in services, tourism, garments, and construction. Growth forecasts for 2025 point to a slightly moderated pace near 6.0%, indicating continued momentum despite global uncertainties. The unemployment rate remains exceptionally low at around 0.27% in 2024, up slightly from 0.23% in 2023, marking one of the lowest levels globally. This minimal official unemployment rate masks high levels of labor participation in agriculture and informal sectors, yet it underscores a productive labor market with widespread engagement. Interest rates are extremely low. The central bank policy rate is approximately 0.45%. A slight rise from 0.44% in early 2025. These ultra-low rates support affordable borrowing costs, enabling credit expansion for households, businesses, exporters, and small-scale enterprises. Inflation is moderate. Annual CPI inflation decreased to about 3.15% in April 2025, down from around 3.70% in March. Inflation averaged between 3.0 and 3.2% in 2024. A stable range that supports consumption without undercutting price stability. Food inflation is slightly higher but contained within manageable bounds. Debt-to-GDP ratio is modest. Government debt stood at roughly 26.6% of GDP in 2024, up marginally from 25.7% in 2023. Projections signal a small increase, remaining below 27% in 2025, reflecting prudent borrowing and careful fiscal management. Here is a summary of the key macro indicators. GDP growth, approximately 6.4% in 2024, projected near 6.0% in 2025. Unemployment, ultra-low at approximately 0.27%, indicating full labor absorption. Interest rate, persistently low around 0.45%, encouraging credit. Inflation, moderate at approximately 3.15% annually, stable and predictable. Debt GDP, low at approximately 26.6%, projected under 27%. Cambodia's strong productivity stems from several structural and cyclical strengths. Tourism is a major pillar. In 2024, tourist arrivals exceeded 6.7 million, underscoring strong foreign exchange inflows and contributing nearly 18 to 20% of GDP. Coastal destinations, Angkor Wat, and cultural sites drew visitors particularly from ASEAN and regional markets. Tourism expansion supports hospitality, retail, transport, and cultural services. Garment manufacturing and exports remain critical drivers. Apparel, footwear, and textile segments account for over 50% of total exports, benefiting from preferential access to Western markets. These sectors have adapted to higher productivity via improved factory automation and labor training. Services including construction, logistics, and real estate expand steadily. With urban growth and rising middle-class incomes, domestic consumption drives retail, telecom, and business service growth. Construction activity, both residential and commercial, supports employment and contributes to GDP. Agriculture, while representing a smaller share of GDP, retains importance in rural productivity. Key commodities, rice, rubber, cassava, pepper, continue to grow, though at a slower rate. Public investment in irrigation, farmer cooperatives, and digital supply aggregation is improving yields and increasing participation in value chains, including export-quality produce. Investment levels remain strong. Public and private investment has risen, supported by lower interest rates and foreign direct investment in tourism and industrial zones. Infrastructure financing, partially supported by concessional loans and public-private partnerships, continues to enhance logistics, power, and regional connectivity. Labor productivity is increasing. With unemployment near zero, firms face competition for workers, driving modest wage growth and on-the-job training. Upgrading skills through vocational institutes and garment factory training has enhanced efficiency and output per worker across manufacturing and services. Inflation regime remains stable with central bank confidence in moderate price growth. Consumer expectations remain anchored, and savings remain insured in local currency. While some cost pressure exists from imported goods, particularly food and fuel, inflation remains moderate compared to other emerging markets. Fiscal discipline is evident. Debt to GDP near 26 to 27% gives Cambodia fiscal headroom for counter-cyclical support if needed. Debt service remains moderate, allowing spending on social development, education, and infrastructure, without undermining stability. Public sector salaries rise modestly but remain aligned with output gains. External resilience is improving, export revenues are growing, remittances remain solid, and foreign reserve levels are adequate. The current account deficit narrows as exports and tourism receipts rise. Key challenges to sustained productivity include vulnerability to external shocks, environmental factors, and reliance on preferential trade regimes. Cambodia remains reliant on garment exports and tourism, making it sensitive to global demand shifts and regional competition. Policy recommendations to sustain and enhance productivity, deepen export diversification by promoting electronics, food processing, and digital services. To reduce reliance on apparel and tourism, invest in skills and education to raise labor productivity, with emphasis on digital literacy and vocational training. Accelerate infrastructure upgrades, particularly in transport, power grid stability, and digital connectivity. To support industry and logistics, enhance agricultural agri-value chains through improved seed distribution, sustainable irrigation, and agri-technology extension. Strengthen fiscal capacity by expanding tax base, improving collection, and targeting spending toward human capital and productivity. Maintain stable macro policy, including moderate inflation targeting, low interest rates, and stable exchange rate management. Improve governance and regulatory transparency, reducing corruption, simplifying business licensing, and enhancing investor confidence. Looking ahead, Cambodia's economy is expected to continue on a productive growth path. Growth rates around 6% or slightly higher through 2025 to 2026 appear sustainable. If tourism recovers, garment export remains robust, and infrastructure projects proceed. Low unemployment and controlled inflation provide a favorable backdrop, supporting household consumption and investor optimism. The stability of interest rates encourages long-term planning. In conclusion, Cambodia's economic performance in 2024 to 2025 exemplifies productive economy dynamics, strong GDP growth, near-zero unemployment, ultra-low borrowing costs, moderate inflation, and prudent debt levels, indicate resilience and forward momentum. The country has built a foundation for inclusive productivity-driven growth. Continued investment, export diversification, workforce development, and institutional strengthening will be critical to translating current momentum into long-term prosperity. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.